This is Austin Booley again. I wanted to talk about my strategy and how I knew that BA was going to drop today. So the market looked pretty well today. I mean, as you can tell, everything is green. But again, when you're options trading, it doesn't matter if it's green or red or sideways. You can still make money. So that's the brilliant thing about options. Um, but what we're actually going to talk today is specifically why I knew that BA was going to drop. So it's more of a strategy video and why I know how to trade what I trade. So first thing I'm going to start off with is Netflix. So as you can check out my other video about my strategy, I'm going to talk about the early range breakout. So in that strategy video, I mentioned that I make sure my time frame is a 15 minute. So we're going to hope this is not Netflix. So I go in 15 minute and I draw a candle on the bottom of the 15-minute candle and on the top of the 15-minute candle, and I wait for it to close below. So the only stock I traded today was BA, but I'm going to show you everything that you could have traded, but why I didn't trade. So if we look at this 15-minute range breakout, so you draw a line on the bottom and the top, and if it closes above, that is a position to buy a call. If it closes below, it's a position to buy a put. So it would have closed here, and you would have had a nice little put range here. I don't know how much that would have been. But the reason why I didn't trade this is because I did not know how far it was going to go. I mean, obviously with gaps like to fill. So I knew it was going to be somewhere in this area, but I didn't know where, and I wasn't comfortable because I didn't know where. I like to know where I'm going to take profits. The next one that worked out well was Facebook. So if we go into Facebook today, if you draw a top on the bottom, or the top and the bottom, and you wait for the close below. So the close below here was here, and we had this nice little dip. Let me go up to a few days. See, I also had no idea how low this could actually go. Obviously, whole numbers are psychological levels in stock market trading. So 150 is like an even number. I mean, I know that sounds weird, but when you go, when people think about taking profits and buying and etc., they usually put even numbers in their head because people love even numbers. So if you want to sell or buy, it probably should be at an even number or 50 cents or something like that. I know people who trade only dollar resistance and support, so they wait to see if it breaks or whatnot. But so I didn't exactly know how far that Facebook could go down. Next one would be Tesla. Tesla took a dip today. So if you can see here, you draw a line at the top and the bottom. That's the early range breakout. I didn't know how low this could go either, because if I'm looking at my support line here, I knew that the support was here. So I knew that if I bought here, it could easily turn around in this area, and I didn't want to buy here, buy a put here wanting it to go down, and then it hits this support and then bounces right back up. So that's why I didn't take the Tesla trade, but it ended up breaking straight through this support, hitting about the, 291 area, 290. 291.36, and then it bounced up above this support. The next one, which is a good example of, I don't know if I can see, oh, it's right here. This isn't an example of waiting for the close, okay? So if I draw at the top of the first 15-minute candle, I'll try to make it even because I like even. Okay. Sorry, taking up time here. Okay, so I draw these lines up below and whatnot. So if you would have waited for the close, hold on, I'm sorry, but I like even. So that's not even, but whatever. So if you would have bought a put here, you would have obviously lost some money, or maybe if you took quick profits, but like, this is why you have to wait for it to close below or above these lines. If it just passes, it can easily go right back in, as we saw here. So you want it to close. So obviously, if you would have waited, it would have closed above this line. That would have been your entry. A nice little power hour trade, which is power hour is the last hour or two of the day where volume comes back in. Because you can see on all these charts, you have the volume. Another one would be Twitter, that you have to wait. Twitter and the Bank of America are just examples. Well, Twitter is an example that the strategy is sometimes it just needs to be a quick day trade. So like you see I drew my lines here. You would wait for the close here, but then it would shoot right back down. Twitter is a perfect example that you also need to take into consideration price action. Look how fast, look at the normal candle moves and all this healthy stuff. So if we go back, you can look, okay, so this is what's healthy, okay, this is healthy movement, and then you have this shoot up, okay, this shoot up is not natural, so you have to also take into consideration price action. So you're looking at a bit of everything when you're doing the early range breakout patterns, which is the first 15 minutes of the day. Now let me go to BA and explain what exactly I did on this trade. This was the trade of today. So this morning, let me get rid of everything that I didn't have. So I didn't have that. I didn't have this. Okay, yeah, so I think that's it. So this is what I'm looking at. So this is what I know that BA is doing. I know it's on a downward trend. So that's why if I'm going to buy in one of these areas of it uptrending, I don't want to hold too long because I know that it will hit this resistance trend line here and then go back down. So obviously it's forming lower lows and lower highs and lower lows. So let's look in and see exactly what I saw here. So as you can see from the strategy video that I've made, I like to connect points. Okay, so as you can see, when the market opened, I connected this point here because I didn't have this point until the market opened, and I put my point here because I saw that, and then I looked at the pre-market, and the pre-market was right there. So I put my point here, and then pre-market was here, so I made sure that my line touched that, and then I drew my line. So basically, because I want to make sure I connect these 2 points, and then basically what I did is I just extended this to the right. So when I saw it up here, people were talking about that it was going to break this little pattern here and go up and explode, or whatever they thought that Boeing was actually going to do. Now what I saw is I saw this heavy, strong resistance line that I talked about right here. So I knew that even if it did explode, it wasn't going to go that high. So I was looking for volume for the explosion. So as you can see, let's try to go back and see if time when it exploded here. So let's see, exploded like right here. Okay, so exploded here. That's not a good example. I'm basically just trying to show you how much volume we need for this thing to explode. So the volume here for this thing exploding, it went up, the volume was decent. Okay, so the volume was pretty high, as we can see. It was about here. We didn't experience that amount of volume, and we opened with a doji. A doji means indecision, so it doesn't actually know what it wants to do, but dojis or indecision candles right by a support or resistance usually means it's going to reverse. So I knew that I had my resistance lines here because I drew it out, and then we have this doji here. So that signifies to me this is going down because it's at a resistance and we have a doji. And okay, so I drew this trend line. So I'm like, okay, so where's it likely to bounce? Because it's forming higher lows here. Okay, so it's forming higher lows. I connected these. So I waited for my 15-minute candle breakout right by a resistance here. So it dropped below. I know I didn't wait for close, as you should, but it was so close to resistance that I knew that my risk to reward was so good. Because if I bought it here, the risk of it going back up was so low, or the probability of it going back up was so low because we were right here at resistance and it tried and failed. So I took a position here. And then, of course, I like to know where am I going to get out. So I extended my trend line, and when my trend line extended, I was like, all right, and I looked and I saw it was at the 324 area. So I was like, all right, so my exit will be 324. I believe what happened was we were showing some support right here at this little at the gap up. And so we were showing some support here, and it was starting to bounce, and I was like, okay, well, I want my profits to stay profits, so I took them and I went on, and then I went on to write another essay for college and all the other stuff that I had to do, and that was good. But I checked back later, and of course, it ends up breaking through and going down and hitting 324, which was my plan in the beginning. Of course, I can't say, oh man, I should have, but I just want to show you guys my reasoning and why I decided to do this and what my exit plan was and everything. So I was right here at resistance. It showed a doji. It broke below the 15-minute candle breakout pattern. I took a position. It broke below the EMA. It went down, and my trend line showed that it was going to bounce at around 324, so that's how I knew what my exit was. The reason why I didn't trade all those other stocks that I showed you before was because I didn't know where I was going to exit. Boeing showed me exactly where I was going to exit, so that's why I took my position. Hopefully this helps. Hopefully you understand why I'm taking the positions that I'm taking, and hopefully you can use this in your own trading strategy. I hope it helped. I will link the strategy video that I made earlier below to help you out, but there's also the Discord chat below if you want to reference that. It is a good quality group that will help you grow. With all that, good luck trading the options market, guys.